When a large bank, aware of their powerlessness to stop it, makes a bullish prediction for gold and silver, it makes headlines. As we delve deeper, I'll clarify the why and the how. Yes, the price of gold and silver have been revised once again by a major financial institution. Additionally, I have already filmed the updated gold and silver price predictions. Then you should stay tuned. I find it interesting. This video will become even more significant after you watch that video. However, the bank in question is UBS, and they have raised their forecast for the third time in a row. Investor demand, macroeconomic uncertainty, and ongoing fiscal and geopolitical pressures have all contributed to this. What seems like their third attempt. I couldn't agree more, and believe me when I say they're going up. However, the future of precious metals is completely unpredictable. But regardless, my pals at Summit Metals are always available to help you out, whether you're in the market to buy or sell, and prices are always low or high. To learn more about Summit Metals, click on the link below. From its previous estimates of $3,800 by the end of 2025 and $3,900 by 2025, mid-2026, the bank now anticipates that gold will reach $4,200 per ounce across all timeframes. The previous targets for silver were $44 and $47 per ounce, but they were raised to $52 and $55 respectively. Time periods within the year, beginning now and continuing until around the middle of 2026, are now being discussed. I will continue to make revisions until the end of the year. The strategists at UBS, however, explained that the changes reflect their anticipation of increasing demand from central banks and exchange-traded funds, as well as continuing support from falling real rates and fiscal imbalances. Yep, you guessed it, all that stuff is still there. In spite of our relatively robust GDP, the current state of the American economy is best understood by looking at a broader range of indicators. Our economy is experiencing some changes. At the very least, that is what's happening, and I think most people would agree with that. Uncertainty contributes to the upward trend in precious metal prices. Strategists have now noted that silver has more potential for overshoot due to its higher volatility, and they have reiterated that their prediction is still biased in favor of an upward movement. With gold reaching real and nominal record highs and silver reaching levels last seen in 2011, a 14-year high, both metals have surged this year. By the way, someone in the community brought up the fact that silver technically didn't reach $50 per ounce in 1980 and 2011 during my live stream. It was almost there, but not quite, so it could definitely be used for government work. Regardless, they believe that silver will go above $50 this time. According to strategists led by Dominic Schneider, precious metals have once again outperformed, with gold reaching new all-time highs and silver hitting its highest levels since 2011. The metals have gained over 25% so far this quarter and 60% so far this year. The team predicted that the present FOMO will last because of macro, political, and fiscal dynamics that should keep demand for safe haven assets high. Additionally, UBS anticipates that the gold to silver ratio will approach 76. Yes, I understand. In other words, silver has a chance to shine there. Now, 76 seems excessively high for this metal when contrasted with gold. It ought to be substantially narrower. Interestingly, that ratio was around 16:1 in 1980, which is quite intriguing. It was roughly 33:1 in 2011. While silver is approaching $50 per ounce and remains above 80, gold is at a record high when adjusted for inflation. However, fundamental factors like the Federal Reserve's decision to cut interest rates again, a declining dollar, and government deficits in big economies like France and the United States are at the root of the problem. According to UBS, these factors are not going to be fixed anytime soon, so real assets should continue to benefit from the current environment. Just this year, central banks are anticipated to purchase 90 to 950 metric tons of gold, falling short of last year's record. Private investors are also expected to increase their allocations as a hedge against the exposure of the US Treasury. And I feel the same way. In my opinion, there will be an increase in purchases. Gold, in my opinion, would probably hold its current value, or maybe even rise slightly, even if they cut back on purchases. While silver and gold are in the lead, UBS is wary of platinum and palladium because of their continued reliance on industrial demand. Although they increased their platinum price forecast from $1,200 to $1,350 per ounce, they still predicted that the metal would have cheaper prices in the future. Put another way, they anticipate its collapse. I guess we'll find out. The demand from the automotive industry is still a heavy burden for palladium. Consequently, it's very interesting. Their bullish outlook on gold and silver and bearish outlook on palladium and platinum is intriguing. The price of gold and silver, in my opinion, will also keep going up. Consider, though, the state of the world as it stands right now. Those factors that have been propelling the price of gold and silver are not going anywhere. There are two sides to the coin that is silver. As a nation, Russia has been amassing gold as a strategic metal, but central banks do not technically own it in vaults, so it will rise in price alongside gold for the same reasons. While Saudi Arabia is purchasing exchange-traded funds, which are not the same as purchasing physical silver, I know that their central bank is actually storing it in vaults. Whatever the case may be, it will be fascinating to observe how events unfold, particularly in China and across the globe, as they pertain to market disruption. Even though China is currently celebrating a holiday, some of the events I covered earlier actually occurred before the holiday. A large exchange-traded fund, ETF, halted all new trades in order to catch up on the 30-day wait for silver, also known as raw silver. These bars weigh 15 kilograms. Apologies, but I don't have any of those in my possession to show you. However, I can tell you that silver is now a highly sought-after commodity, and it's truly remarkable to witness its trajectory. Even though there will be consolidation and a little pullback, I still think it will keep moving forward. As a result, I am uncertain whether I agree or disagree with these UBS targets is something you can find out in my video. Now, another thing about central banks' forecasts and targets is that some people think they are manipulative factors, maybe even suppressive for gold and silver. Put simply, they raise your expectations to the point where you become disillusioned, jaded, and disappointed every time you go to make a purchase. As a result, you lose your composure and sell due to anxiety and frustration. That's not okay. Fear should never motivate you to buy or sell. Keep your diamond fists firmly gripped onto your silver. Yes, that is the right thing to do. As we cling to and push forward with our silver and gold, we must also maintain our diamond fist. Quite a journey it has been. Silver and gold are currently experiencing a favorable cycle, which is expected to persist, as anyone who has been stacking for any length of time can tell you. However, regardless of whether its price drops, it still does. No changes have been made to the metrics. In general, the foundations are in place for the metal's long-term behavior. The possibility exists that the price might drop if central bank policies or the economy were to undergo a shift. As we can see with these ongoing price increases, there will inevitably be consolidation periods in any bull run. Everything we've witnessed thus far has been a little bit of a knockdown. At this point in time, I can recall 2 instances where it occurred. It hardly lasted more than a couple of days before they were back on the track. And I believe that is a major component of the reason why UBS is revising their metals price forecast. The markets, though, will remain under my watchful eye, providing you with up-to-date information, analysis, and insights about precious metals is my main goal here on the channel. In that case, I'd be grateful if you could subscribe to the channel and enable notifications so you can be the first to know when a new video is uploaded if you find value in what I do here. Therefore, that is our practice. For that reason, I intend to keep going forward. Despite the current price levels, are you continuing to purchase gold and silver? Actually, I am, but I'm trying to rein it in a bit. Making a purchase is challenging. You can now buy gold by the ounce for some of the larger purchases. It is what it is, and it is extremely difficult. These days, that's our home. It would appear that fractional gold is currently the way to go. Thus far, my only purchase has been a fractional gold bar from Summit Metals. If you visit their website, you will also be able to do it. You can find the link in the details section down below. Thus, without further ado, I want to thank you from the bottom of my heart for watching. And I beg you to do me a solid by rating, sharing, commenting, and subscribing.